Good evening, everybody. This is Ken at Tortoise Capital. This is going to be a mini masterclass on some important charts from today's intraday trade with Brazil. And then I'm going to hit a quick look at the daily report while we're here and make a few other comments. Okay. So this was a look at EWZ from during the day and markups from the chat room. And this started off with some trades earlier in the day where we were looking at the U.S. and the Canadian dollar going down. This is one from Frank. He had set up a trade here. It got short and profit targets here and here. And so the first one hit, and then he cashed later. There were a couple opportunities intraday where he might have also added to those positions en route to that first cash. But just a perfect setup, this collapsing dragon from the previous support level and then declining highs, and then he bought the break with this initial stop here, set up really well. This is on 15-minute charts. Now he's got this set up so that he's collecting those profit targets, so he can set it and forget it, and he uses that as a trailing stop. So the only way he takes a 1-hour loss on this for execution is if it immediately goes against him from the moment of entry. So this was a really nice setup. He attended a weekend base camp workshop, and on the basis of that is applying these techniques in a way that fits him and his trading style and his windows of opportunity. So well done there. So while the market was generally up today, EWZ gapped up and then was declining. And so we started with a hybrid frog Z3 breakout here in the late morning, which got short after this Z3 pinch, which is a super pinch because you have compression less than a frog box, and then the RL 270, the 90, the 30, and the 10 are all inside this tight cluster. So the breakdown gets short. That coincides with a break into the winter. And then we just take the RLXD entry. It didn't fail further here, but it got a low and then a higher low. So this is an owl. So we just buy that. I scratched here because it felt like it was going down and it had a chance to go and it didn't. So this was a scratch trade on the reversal. This did not fail further and actually found another Z3 pinch and a breakout, and this time it's above the VWAP. And so at the same time, this dipped into the winter, crossed into the summer, and then on a breakout above the Z3 excursion, it got long with an initial stop, which is the same size as the noise boxes over here. So this is using that adaptive intraday noise box. Minimum manageable risk box. In this case, it works out to about 15 or 20 cents. And on this initial buy here, for example, if you're buying this, you might have a stop at just below the Bollinger Band mean, which is also at Z-1 or at Z-2 or at Z-3. So you can see how with an entry at 43.98, you might have 3 different reasonable execution risks that you might choose. And any one of those I wouldn't quarrel with you. So this one is long. It didn't fail further. And then it zoomed up, found some support. And then instead of failing, after another Z3 pinch, add the second position, add the third position on the breakout. And then by this time, it felt like it was done. And it had rolled sharply through the Red River and was coming out. So this is a nice way to make bank on 3 positions. So it captures a total of, so that's 44 points, or actually 48 points, call it 50. There is, from this entry, 31 to, so that's 30 points, and then another 10 points. That's about 80 cents on 15-cent risk. So that's like 6 execution risks intraday. So this was the markup. Now, at this point, we're going to go into some other flashcards and say this is what it was looking like, and you might then say, how could I frame this and look for a return to several reasonable targets after a really significant excursion of 6R? What's the chance? Well, if it finds support above the Bollinger Band mean, I'm just going to play the RLXD just like I did down here. That's easy. But on the short side, is this an opportunity that I want to play, or what could it do if it starts to fail? And why do I take this exit when I've got 3 positions in and 6R in hand? Well, a move back to the Bollinger Band mean is the least surprising, and overshoot to Z-1 wouldn't be surprising. A move to long-term fair value, which is the RL270 here, would be not surprising. A breakdown out of Z3, now that would be the surprising move to go beyond there, beyond this level of support. And then if it were to break through there, then a move back to the VWAP, the volume weighted average price intraday, would not be surprising. Then a move to support and to support. So from this trade frame, there's about 7 or 8 moves that could reasonably occur. And I'm holding 6R in hand, so how much more did I want from that? So this looks like excess gain. So back here, the RL270, the VWAP, the Bollinger Band mean, these are all tightly clustered in this super pinch, right? And then the traders start making that excursion away from that fair value, and then on the basis of those moves and people adding to positions and whatnot, you get this expansion away from long-term fair value. So to preserve that outsized gain, that's why this is in there, lock in 6R in hand. So you might use this white space, stop the tape, and then start mapping out those strategies. Where could it go if it fails from here? Where could it resume to? Now, if I'm measuring the upside, I just go to the daily report, find the range stat, find the low of the day, which is here, and add a range stat north, and then that would be my upper limit of the maximum intraday reasonable range. I'll leave that to you to sort out. Now, what actually happened is this. And look at the least surprising moves. It rolls over, doesn't make a new high, and rolls over again. This is where you can legitimately get short at 44.51. So that collapse is the same place we got long the last time, but in the space of about 20 minutes, we can adopt a short side bias. Why? Because it broke into the winter here. So now I have a short side bias because it's below the MACD histogram. It comes back to, in a very orderly manner, the RL270, which was still rising, but now getting ready to roll over. And now the Bollinger Band mean rolls over. And now you're getting volatility compression and now expansion as this starts to become a directional move. And it gets back to the previous support level. And now when that resistance breaks, you get another big move down to the Bollinger Band mean, to the VWAP, excuse me, and then down to this support level and breakout level, and then that holds until it collapses into a Z3P by the end of the day. But I want you to notice that all of these moves from the VWAP to the maximum excursion away from the VWAP, that is the maximum favorable excursion, the gross gains, and then the reversion to the mean. Now, the difference between the VWAP here and the VWAP there is the net. So this is all excess traders gains and enthusiasm, which disappears. It has a short-term duration, and the memory is not as important as the momentum. So that's why this is such a nice exit. You'll notice that's a tipping point. Well, we could now label this up. The takeaway points I want you to think about now are this thick orange line is tracking that VWAP, and notice that rising. That means this is still a long side bias move, and that this big green line was the maximum favorable excursion, and the move here is giving up those gross gains, the loss of tradable gains, a measurement of the cost of optimism over experience. So if you are overly committed to your optimistic view of what should happen because you're holding 6R, you're going to pay back some of this. What I actually gave back was that. If I had believed in the position and was going to try to make it work, maybe I give up some or all of this back to the VWAP. Now, by the end of the day, the difference was from this support level and the VWAP move, this is what was retained. That's the residual long-term gain. So you can think of that as the net and then that as the gross. And now this becomes the tipping point where the RLX, the P1 happens. You had 1, 2, 3 legs up. You had the market get to the maximum favorable excursion and then roll over from summer sharply through the fall, through the Red River and into the winter. This is the tipping point. Notice the time of the day. It's in the afternoon, and so there's only 45 minutes or an hour and 45 back to the close of the day when people got to unwind their leverage positions. So you got to listen for that and feel that like a crack in the floor, the breaking of wood, the stress, and now it snaps. There's a tensile strength to the psychology of belief in short-term momentum and leverage, and that breaks with a palpable feel and sound in my view. I can feel that. And now by this time, when the RL 270 finally confirms, that move back to the VWAP has already occurred. So this move here is giving up one in order to protect against 2 or 3 scoops of a reversal move. So that's your 2-to-1 minimum reward to risk preservation. Here it's a 2-to-1. You're risking this much, anticipating the potential for 2, and you got 3. So I want you to notice the size of these noise boxes, and then those become sort of the template for the intraday move. As you get proficiency in the various symbols, you'll know what your minimum manageable risk boxes are, and you can use that to help you with trade geometry. So that's what I want to say about EWZ. You should take those 3 flashcards and just study the heck out of it. Understand what those 4 regression lines are telling you about fair value and trader's price at different time frames. Now this happens to be on the 3 minutes. It's even easier to see this stuff on 5 minutes. It's even easier to see them on 1 minute. Okay. Let me now shift to some daily reports. The market health check for today. We made the adjustment, so we moved the 1-day look back, the 10-day look back, 30-day look back, the range from the high to the low. Here's the current price. This blue line was Monday's opening. This is the 10-day look back period. Notice the dragon is rising. A Z3 future excursion, a breakout from above today's high, which is also the 10 and the 30-day high, halfway to the Z3. The dragon is on the northern edge of the river. The 10 is up, the 30 is up, the dragon's sloping up, the Bollinger Band mean is sloping up, the RL 270 long-term fair value is creeping upward. This is the long-term fair value back here at 323. Hey, a couple weeks ago that was at 295. That's how strong this market has been. So on the downside, we have the 1-day low, the RL 90, north skin of the dragon plus the 30, the dragon spine, the belly of the dragon, and the Bollinger Band mean, Z1 and Z2. We also have the belly of the dragon here at 325. We have the belly of the 10, which also coincides with that long-term fair value. So that's a very strong set of support levels. So these are all measured targets on the downside that if we get a crack here and a collapse, then those become reasonable targets on swing term time frames. And then the size of these daily moves, it can easily get down to 331 on a 1-day move. So that's where you look for the daily range stat and then measure from the swing high. That's how far it can easily get in one, not easily, but that's how far it can reasonably get in 1 day. And now you have an estimate of the distance it can actually move when it cracks. And when it cracks, it makes big moves. Example, just within the last day, the last 10 days, it moved from 328 all the way down to 322. So a $6 move from the swing high at 338 could get to 332 in a single day. And that's through the boundary of the dragon and the RL30. So it could almost get to the spine of the dragon. So that's the magnitude of the potential moves intraday if this market runs out of gas. And why could it run out of gas? We're at all-time highs. Guys want to bank gains. The Fed chairman briefed Congress he's maybe running out of ammo, so there's concerns about this unlimited liquidity that's still out there. So that's a quick look at the daily market health check. This was the daily winners and losers today. Let me see if I can scope that up a little bit. So if we want to look at the big winners of the day, alternate energy, oil, natural gas, the triple leveraged Dow, which was better than the triple leveraged S&P. So when we scroll down, we see, hey, the S&P was up today, 0.64. That's good. So everything north of it has some additional advantages. I like that Wiz is there. What I'm thinking is that when Wiz is favorable, I want to be in either the triple S&P or the triple Dow. And right now the Dow is pretty strong. Triple Dow has a weekly summer and a daily summer, so all systems go in the Dow. The S&P also has a weekly summer and a daily summer, so that's all good. And then these were today's momentum plays. I like technology and energy were better than the Dow, so those were along with a rebound up in these energy stocks. So when energy's up and it's better than when the S&P is up and the energy is better, now I'm looking for things like Devon and oil and natural gas and alternative energy. It's the whole energy complex is rebounding. And if you go back and listen to the weekend report, we identified energy as one that was potentially in a turnaround. So at the bottom end of the stack, the triple inverse oil, declining volatility in the VIX, commercial real estate, wheat and precious metals. So that's a move away from defense and towards equities. That's what's happening there. Treasury suffered today. And now within the materials, I'm looking at U.S. Steel, Cliff Natural Resources. So these are all in Home Depot. These are all areas in which there may be some weakness developing in that sector of the S&P. And I noticed that XLB, basic materials, was less than the S&P. So there was some selling pressure there. So I'm looking at relative strength, buying and selling on a daily basis, and then using the guidance of the 4 seasons to zero me in on things that I really want. Now, when I look at my daily report, and I can do a quick speed run in here. This is the daily report for 12 February. We've already seen the market health check. Bullish, volatile, overbought on every measure to a significant level. Look at that 10-day NDX. The risk Z is just into the spring and rising. So there's more swing trading goodness ahead. So it's risk off. But in the springtime, that's the opportunity for some continuous swings. And we've already seen that happening in the S&P and the Dow and energy sector. 10-day max pains and min pains. These are the ones that have the most value to make up. No signals naturally in overreaction or channeling because market is at all-time highs. Lots of dojis today. Several auto framers that are fine. Some breakouts in the green here in United Health, Cat, Nike, Walgreens, Apple. So that's an area where tech could really be amazing. A breakout up here in McDonald's. No other signal, but McDonald's on its own merits. Breakdowns in Merck and Procter. So that's an XLY or healthcare kind of a concern. In the ETFs, still plenty of dojis, one channeling over here in silver. Big breakouts in many of the ETFs, and so that's where I'm starting to look at some of these other great sectors. And now UDOW, that's sort of my default go-to right now. If I see strength intraday and the Dow's better than the S&P, that's an auto buy, and I intraday trade with UDOW, and then keep a piece for the swing trade. And as long as Wiz, that artificial intelligence thing, is doing well and is above its support level, then I really want to have exposure to equities and make hay while the sun is shining. I got to respect my stops though, but that's what we're doing. I notice IYR real estate making some breakouts here to the upside. So those are some things I can look at in my frame. Lots of super pinches starting to break out. These are candidates for breakouts to the upside. So financials, Euro 350, industrials, mid caps and small caps. That's a possibility there for U.S. leveraged ETFs, the growth opportunities. If the large caps are doing well, maybe the traders would want to get on board with that. These are the most positive Z stretches. Those are going to tend to be your breakout leaders, relative strength leaders. Not surprising, Microsoft, the stealth candidate. These are the ones that's suffering the most. See a lot of energy in there. I like this in EWZ. There's room for that to grow. It is a negative stretch. So it's at the bottom of its river at a z-square of minus 0.49. That means there's still a lot more room for that to go. And there was a lot of buying pressure today. Now, it gave it up intraday, but it closed higher than it opened, so that may be a turnaround. That's going to get a continuation play. I'll start it with a hybrid frog and then keep a piece for a swing trade if there's more gains. The auto framer, this typically looks for retracements back to the 10-day high, and there's some good swing trade one-day multiples. Regression line fractal framework for some swing multiples that look attractive as well. Daily squeezes, these are ones that if I just get a range stat move, that maximum intraday reasonable range, maximum reasonable intraday range, I should say, and using a full day as a risk, then I get multiples like this just on a one-day move of a range stat from a breakout above yesterday's high. So I'm going to be looking at Boeing continuations in the S&P, and I love that DIA and IWM and SPY are all on that. So this is great days ahead for the market to the upside. We plan that right from the opening. So the Four Seasons summary for ETFs and for the Dow 30, the quick summary of the Four Seasons of the boot camp swing candidates. I like looking at the springs and then the summer leaders, especially now. And then the NDX, big breakdown in Merck and extraordinary performance across the board. Look at United Health and Caterpillar. I mean, how do you not love that? And then down here, it's the big symbols or the big indexes are catching up. These breakouts, now these guys got to play catch up to the U.S. symbols, which were all overbought. This is the rest of the world catching up on the infectious global equity joy. And I think the tipping point in the coronavirus, the fear is over. The fear may be there, but the threat is over, in my view. And so the money will start flowing back into value plays. That's how I'm reading that. There's our little opportunistic coyote, jackal, carnivore, omnivore. Market has shaken this off really well and climbed the wall of worry. Found support at the long-term average, made the P1 here, and now is getting ready to resume. Broke through on a stretch and made the crossover over the 10-day period. So this is all systems go on the long side, particularly when you increase it. The next real test is if this were to get to here on the slope stat. So there's another 3 to 5 days of movement. So this week I'm expecting some goodness, at least Thursday and the first half of Friday, and we'll see what happens going into the weekend. The 10-day slope is excellent. The 30 is turned. The 90 is holding at this long-term stable peak. It broke above the previous hump here and is out of the river and gaining, but not exaggeratedly so. This is not yet exaggerated on the 30-day slope. Although there may be, like I said, going into the weekend, there may be some preservation of gains that wants to be made. But I'd be looking at previous resistance and the edge of the river as really strong support. That's everything I want to cover, and I'll just flash through the rest of these here for you. I'm going to do a separate recording for what turns out to be a really interesting excursion here. We were talking in the classroom today with my military students who are trying to integrate and balance these three distinct roles that we see for military officers: practical leaders, teachers, managers, soldiers. And this is the Mintzberg triangle, but expanded. So we're concerned about art, science, and management, and then the integration of those, and then some kind of sweet spot in which, depending on the roles and duties that you're performing, you need to blend all or some of these together, and then that there are skill levels that you can achieve in each of those dimensions, and a skill level at the integration of those. And then that led us into thinking about how you balance among all those in a sensible, consistent, long-term way. What's our maximum sustainable rate of growth in all of these dimensions? And that when you think about the relationship of art and management, there is an art of management and a management of art. And then there's a science of management and the management of science, art of science and the science of art. And then even more complicated, the art of the management of science and the art of the science of management. And as you start thinking about all those more complex roles, you realize just how challenging this socio-economic humanistic world is that we live in, this network of people and competing ideas, values, and time frames. And so some guiding principles, some direct and indirect questions, some yin and yang questions. Who are you? Where are you? What are you doing? Where are you going? Why are you going there? How is it going? And how can I help? And then the soft questions, like how does it feel? What is it like? What else is there? What else could there be? And why do we care? There's a kind of a yin and a yang set of these questions that help keep us grounded and centered and mindful as we go about the daily practice and the daily learning. This is sort of the environment that we're living in, trying to do good, and trying to learn to do better at the same time, balancing short-term and long-term, production versus improvement, development versus performance, getting better long-term in the way that we execute our short-term, and then learning from those to continue to raise the bar. That's where this notion of acquiring craft knowledge and the reflection on the things that we do is where we get that long-term development. And that's where some of these other elements come into play, the art, science, and management, as bodies of knowledge, and then the role that you play inside each of those. So this was an interesting thought experiment for us today. And I'll have more to say about that, but I would ask you to just think about it, feel your way through that. What kind of places does it take you? What kind of questions do you get? Or what kind of answers do you get when you ask yourself those questions? What other questions could there be? Think about that as sort of the raising your sail for that wind of reflective learning and self-awareness and mindfulness. So keep your wrist measured and your powder dry. Take good care of yourself and those around you. Stay alert. Take good care.